broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live as always from the CNBC-TV18 Motilal Oswal studios. It's a Tuesday morning. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, good morning, guys.
Hi, good morning, Prashant. Good morning, Nigel. And the bulls have been racing through the Lal Street, right, over the last couple of days. I was just having a conversation with a market expert who suggested that perhaps because of what's happening on the political scene as well over the last few days, there is this expectation that maybe the NDA government could come back with a big majority this time, and maybe that's what the market is looking at. Whether it happens or not, of course, time will tell, but this is crazy times in our market where it's just up and away.
Well, that's right. Domestic cues are looking good. I think when we come back on Thursday, we'll be eyeing to see what exactly did the Fed chair say, and hopefully the tone, so to call it, is pretty okay.
You know, Sonia, I take your point because Friday the market was down. The only thing which happened between Friday and when we came back yesterday and we saw that mad rally on banks especially is that we got through the second phase of polling.
Correct.
And I mean, it's possible that the market got a sense that, I mean, you know, all the talk so far for the first two phases has been about low turnout and how the low turnout is bad for, I mean, the incumbent, which is the BJP. I mean, for example, on Editors Roundtable, we put out that piece saying that it is not necessarily the case. IIFL went seat by seat. And I mean, I think some of that may be turning, and that could have kind of sparked, you know, the sudden move that we've seen. But in any case, I think, you know, just to kind of rewind the clock and tell you what sort of caused it, or rather just looking at whether it was flows, whether it was short covering, I think it's very clearly short covering. At least that's that's what the data suggests. So yesterday's sort of rally, especially what you saw on banks, and you know, because it was banks and banks is largely owned by, not largely, but you know, it's FII favorite, and the way banks rallied, the bank nifty was up 2%. There was some at the margin hope that maybe, you know, this is essentially FIIs at the margin coming back a little bit after being very tepid, uninterested, or actually even sellers. But that was not the case. You look at the FII number, there's really not very much to corroborate the big move that we saw. But FII in index contracts, index futures, the number is on your screen. On Friday, they were about 99,000 contracts short, and yesterday that number was cut in half. So, you know, as of yesterday, that number stands at about 46,000 contracts, just under 46,000 contracts short. So this was, I mean, yesterday was largely a short covering move. I think that's pretty clear. Now, just to sort of look at what happened overnight, equities have seen a modest upside, nothing very large. NASDAQ is up about 0.35%. There was no catalyst, news, data, otherwise out of the US. The 10-year yield that, you know, lost 5 basis points. We're at about 4.61. So, you know, as you want to get away from that 5% mark as much as possible and not revisit that anytime soon. Now, you got the dollar index, which fell to 105.7. Again, good news. Actually, oil prices also came off, and they were down about 1%. We're at about 88.5. So this morning, I mean, if you want to take off the cues from global markets, it's actually positive. Equities are up, yields dollar down, and you got oil prices which are lower as well. Fed decision tomorrow. I mean, it's a two-day meeting. No changes expected, but I think we'll hear from Fed Chair Powell. And is he going to, you know, start to himself seem a little doubtful? Because he's the one, by the way, who started to sound dovish in the first place. Many of his colleagues on the Fed who are voting members have been kind of being a little more hesitant, but he's kind of said that, well, you know, he sees a path towards that 2% number. So will that change because of strong data that we've had over the course of this year? Something to watch out for. Just to tie all of that back to levels for the Nifty, the immediate resistance, of course, is the all-time high. It's not very far away. 22,775 is that number. On the downside, the swing low, which is 22,385, must not break now. So roughly 22,400 if you want to sort of go with one level. And for the Nifty bank, I mean, the question you can wonder is, are we starting a fresh expansion higher? Banks have been a favorite, but the complaint has been everybody already owns it, so you need incremental buyers, and that's not been happening. Yesterday, big move, but, you know, I go back and sort of point out the fact that a lot of it perhaps was covering. The low on the Nifty bank of 48,088 should not break as far as the bank Nifty is concerned. And then, of course, I mean, upsides, we're already at a new high. So we'll see, I guess, 50,000, at least in the first instance this month. The GIFT Nifty will come up on your screen, giving you an indication of how the open is. That's about 50 points higher, 22,000. 799 or so as far as GIFT Nifty futures are concerned. Sonia.
Oh, absolutely. Just look at that, right? After the big rally yesterday, the market indications are the GIFT Nifty is suggesting that there'll be an incremental move today. So clearly there's something that this market believes. Perhaps the magnitude of the NDA victory is something that the market is looking at very strongly. That's why you've got this fresh spurt of energy in the last couple of days. Just look at the trends, right? The Nifty is now comfortably above the 22,600 mark. So it's very, very clear that it's a strong uptrend that this market is seeing currently. The Nifty has now gained almost 700 points from the April 18th low. So in less than a fortnight, we've gained 700 points on the index, and all this after the polls began. And the after the phase one polls, of course, despite the low voter turnout, the trend has been on the upside for the NDA government. Now, the US markets and the global markets have been very strong. This morning as well, Nikkei is up 440 points. The investors are, of course, looking to the Fed decision. But if you look at what's happening back home in terms of flows, the domestic participation has been so very strong. So last 6 days running now, we've seen DIIs buy in this market. It's a total of almost 43,000 crores that have been pumped in April so far. So really, this market has good things going for itself. Now, things to watch tomorrow. It's a market holiday, but generally on the first of the month, you get auto sales, and the data is due tomorrow. Looks like this time is going to be another good month for the two-wheeler sales, because the expectation is that there will overall be a 15 to 18% growth for names like Bajaj Auto, TVS Motor, Hero MotoCorp, and many of these stocks have rallied quite a bit already. So keep that on your radar. And today you have results from the likes of REC, IOC, there's Exide, which has done very well. So those numbers are coming out today. There's Adani Total Gas as well. So lots of numbers. But I think the market's, eye is going to be on the Bank Nifty because of the kind of run-up that we've seen, that those 50,000 levels being spoken about as well. And that's really supported the market of the last many days.
Well, that's right. It's a little tricky actually this morning, because if you want to have that good holiday, maybe you take some money off the table. But if you're a positional trader, then what you do is you trail your stop loss and you continue maintaining that long bias. So it appears that
What holiday?
Tomorrow.
It's a global holiday, not just in India, by the way.
That's right. Let's get to the cues then. The Nifty appears it's on its way to around the 23,000 odd mark. The Nifty Bank, it has a date with around that 50,000 odd mark, and we've been making this point as well. Today, the volatility will pick up in the second half of trade ahead of that holiday, because you have the Nifty Financial Services Index and the Nifty Bank. Both of them will play out the weekly expiry. So financials as well as banks will continue to remain in focus. What did the FIs do yesterday? Well, they added long positions and they bought index futures. They added close to around 37,000 long contracts. They covered shorts of close to around 15,000 contracts. So big swing factors what we saw out there. And as we mentioned last week as well, every time you see the FIs net short at around 1 lakh contracts, that's a trigger to go ahead and buy. And it played out yet again. Yesterday, we had a big rally. Last week as well, we did see that the FIs were net short were close to around 1 lakh contracts on the short side. And just take a look at the swing factor. Getting into the weekend, we were at around 53,000 contracts. We came out with a close to 1 lakh contracts on. And yesterday, you saw that half. From around 1 lakh contracts, it's come down to around 45,000 contracts. But there are still shorts in the system, which is heartening. What do the options data suggest? Well, there were two strikes that were fairly active. The 22,850 call, well, that added close to around 35 lakh shares odd. And the 22,500 put, that added close to around 40 lakh shares. I'll tell you what, in an uptrending market, you want to see the nearest strikes, see good amount of open interest build up. And that's precisely what happened. Which brings us to the levels. Now, since we are on our way to around the 23,000 odd mark, I'm giving reference points on the downside. One is the 20 DMA and one is, the 50 DMA out there. So that 22,200 level, till that holds, you'll have to say that this, up move is well and truly on. On the Nifty Bank, well, we're facing some resistance at around that 48,500 odd mark for the last couple of weeks, actually. Yesterday, we took that out and we took that out decisively. So that's the first reference point. Well, the 20 DMA becomes important. Well, yesterday, we saw a bit of an underperformance coming in from the broader markets. But there'll be a couple of stocks that will be in focus. And what's on my radar is Vesuvius. Well, the stock has seen a big rally. It doesn't trade very, very cheap. But good revenue growth is what we saw with them, and margins coming at the highest we've seen in the last 10 years. So that's why I expect that stock to be in focus. Premium valuations, but maybe rightly so. So keep an eye out on that one. The second stock I'm looking at is on technicals that we saw yesterday. Bank of India is trading above the 20 as well as the 50 DMA. It's managed to cross that level. It's very, very close to that 52-week high that we're talking about. And yesterday's up move that we saw for around 3.5%, well, it came on solid delivery. So delivery yesterday was close to around 3 times of what we normally see. And banks have been finding favor So I think keep an eye out on this stock. If it can defend the 20 and 50 DMA, which is around 140, 143 odd rupees, then that stock looks good for more. So maintain your long bias and trail your stop loss. That seems to be the trade today.
Okay, thanks a lot for that. Well, on the equities front, we have a comment coming in from Gautam Dugar of Motilal Oswal Financial Services, who says the next leg of the market rally could be led by election outcome and the magnitude of the NDA victory. He also spoke about Q4 earnings, where he said that banking results were better than expectations. ICICI Bank, SBI and Bank of Baroda are their top picks at the moment. He also added that results from Trent, Ultratech Cement have been very strong, and hence they are bullish on a couple of these names, while they were disappointed with consumer staple earnings, which were quite subdued in this quarter.
Okay, some money market views. Abhishek Goenka of India Forex and Asset Management says better than expected US corporate earnings and no adverse news flow on the geopolitical front have resulted in a revival in risk sentiment despite expectations of a Fed rate cut getting pushed further out. He says tone of the Fed policy on Wednesday and US April jobs report on Friday would be crucial this week, adding that rupee has been relatively stable and he expects it to trade between 82.7 to 83.7 in the medium term.
All right, and on the bonds, Vishal Goenka of IndiaBonds.com says the markets await cues from the US FOMC meeting this week, along with a spate of macro data around manufacturing and employment. Overall, Indian bond yields continue to see much lower volatility versus global bonds, and he expects the bond market to continue to trade in a limited range with the 10-year benchmark yield in the range of 7.18 to 7.23%.
A lot of stocks to track for you today in our special top 10 segment. Let's run you through the list. We're looking at Poonawalla FinCorp, Linde India, SBFC Finance, UCO Bank, Jana Small Finance Bank, KPIT Tech, as well as Vesuvius. 7 out of the 10 will be reacting to positive news flow. On the flip side, Canfin Homes, Birlasoft, and Tata Chemicals will be reacting to negative results.
Okay, well, Cameron Brand is with us, Director of Research at EPFR Global. Cameron, good to have you with us here. Thanks very much for your time. Just a quick sense on flows towards emerging market funds and India funds, Cameron, since the last time we spoke. What's the latest?
The latest is going slow would be the best way of describing it. There hasn't been a wholesale backing off from emerging markets, but there's been extremely modest interest from most of the major fund groups. That includes India, which maintains its winning run, but at a much lower level than I've been seeing for the past year. And within the emerging markets universe, there's sort of a recovery of interest in Latin America. And we are seeing a rotation in Asia from India towards Taiwan.
Rotation in Asia from India towards Taiwan. That's interesting. So are you trying to say that money is moving out of India, and do you think that is a trend that you see over the next many months? If yes, what would the reason for that be?
What I was saying was not so much a direct rotation, but a definite shift in emphasis. Dedicated India equity funds are still attracting fresh money, but just at a much slower pace than we've gotten used to. And the dedicated country group, certainly over the past couple of months, which has seen above it average inflows, is Taiwan. I've seen a little uptick in interest in mainland China stocks past couple of weeks. I don't know if that'll hold, but we are seeing that as well. Very little interest in the EMEA universe. Nervous eye on South Africa's election, with the expected outcome much less positive than the one that's generally being penciled in for India's current election.
Okay, all right. Hi, Cameron. Good morning and good to see you in. The FI flows actually, the big inflows, the bazooka flow, so to call it, have been missing from India. Do you think that the foreign investors are waiting by for maybe to get, the election results out of the way? And then we see, re-emergence of those big flows that we are seeing. So maybe for the time being, they're in wait and watch mode, and their holding has come down to record levels, I think the lowest in multiple years. Then do you think we'll see the flows come in?
Well, I certainly think you're right in the first part, that wait and watch is very much sort of the investor sentiment we're seeing, both in regards to emerging and developed markets. And I certainly think that we could see a return to a higher level of flows once the election is done and dusted, and some of the early tea leaf reading about the monsoon rains is over. But we're also moving into that time of the year, the old sell in May and go away. Given the sort of high levels of uncertainty, unless there's a major geopolitical shock, I'm inclined to suspect it's going to be a somewhat more low-key summer in terms of flows. I think until people get a real sense of what the Fed is going to do and where and when the pivot point is, it's going to be hard to get too excited about taking on too much risk.
So you think in that sense tomorrow when we hear from them, it'll be important? Could be market moving?
It will if it's not what everyone expects, which is rates on hold and a further reiteration that the Fed is going to approach this from a data-based perspective.
All right, Cameron, we've got you on a bit of a scratchy line, so I think we'll have to take this to another day. But as always, thank you so much for joining us on the show and have a great day. Well, that's the word coming in from Cameron Brand on all things flows related and how India is positioned. Let's take a quick break. So many stocks in focus. The Nifty Bank hit a record high yesterday, so those stocks to talk about as well. All of that coming up in just moments from now. Stay tuned.
Friends.
Well, today looks like it's going to be another very good day after what we saw yesterday. Perhaps some more follow-on buying, but so many stocks to talk about. So without wasting any time, let's go across to Abhishek to talk about Canfin Homes and Poonawalla Fincorp. How are the numbers looking?
Well, it's a mixed bag of numbers coming in from Canfin Homes, more on the bad side. Take a look at the net interest margin. It's at 8-quarter high of 3.96% versus 3.92%. However, the spreads have actually declined by 28 basis points sequentially. Asset quality has improved, seasonal in nature. Gross NPA ratio is at 0.82% versus 0.91% in the previous quarter. Disbursements have declined by 8.8% YOY, which has led to AUM growth being the lowest that you are seeing in last 11 quarters, coming in at just 10.9% YOY. Poonawalla Fincorp, strong quarter continues for them. Disbursements are up 52% YOY and about 11% sequentially. AUM growth is around 55% YOY and more than 13% sequentially. Asset quality has improved. Net interest margin has declined YOY but improved on a sequential basis. The NII growth is 57% YOY and 16.5% sequentially. PAT growth is 83.5% YOY and about 25% sequentially. Back to you.
All right, Abhishek, thanks very much for that. So that's Poonawalla Fincorp in focus. Tata Chemicals is the next one. Sonal is here with details on the numbers here. Sonal, morning.
Good morning, Prashant. Well, it was a very weak set, much lower than what the street was working with. If you look at the numbers, revenues down 21% on a YOY basis, EBITDA is down 54%, margins at 12.7%. That's a multi-quarter low for the company. And the surprise was a loss this time around to the tune of 827 crore rupees versus profit that the company reported last year. It was on the account of one-time non-cash impairment in the UK soda ash business of 963 crore rupees. Even strip of that, the profits would have been lower than estimates. Both the segments did not do well. The basic chemistry business, where the revenues were down 21% and reported an EBIT loss of 682 crore rupees. Similar is the story with specialty products, where revenues were down 20% and EBIT loss came in at 39 crore rupees. Expect the stock to be in the red today.
Okay, all right. Thanks for that, Sonal. Well, another one that could be in the red would be Birlasoft. Rima joins us to tell us more. Morning, Rima.
Hi, good morning. So the revenues for Birlasoft is lower than what the street was anticipating. The company's delivered a 1.6% revenue growth, lower than consensus expectation of about 2.2%. That said, margins have improved by 30 basis points. EBITDA is at 16.3%. But the overall deal wins for the company, the new deal wins in FY24 are down 4%. So that makes the street a bit worried that what could the growth look like for the company next year. Nuvama has downgraded, Birlasoft posts the numbers to reduce. They say flat TCV. TCV is total contract value, deal wins, and no margin expansion will keep the earnings growth subdued, and therefore current valuations at 24 times forward multiple appear to be expensive. So a miss on the top line and a downgrade by Nuvama. Back to you.
Okay, thanks a lot for that. Well, the stock has been reflecting that, right? Look at the performance in the last 3 months, down 20%. Let's move on now, actually. Sonal is with us to talk about Linde India. Sonal, how did it look?
Well, Linde India is in focus, and it has been in focus for past couple of trading sessions. Now, SEBI has asked NSE to appoint a valuer, and this is via order that SEBI has issued, where they've asked NSE to assess business foregone by Linde and related party transactions with Praxair, where they had entered into a joint venture as well. The order says that they need to oversee and value the business opportunities with relation to related party that needs to be scrutinized. They've asked Linde India to also reimburse expenses incurred by NSE in the valuation exercise as well. Now remember, Linde India and Praxair, they had entered into a JV of 50-50. This is to set up Linde South Asia Services, where Linde South Asia Services would have provided admin services and other services to both of these companies. An agreement also contained a clause to allocate products and geographies to both entities. Now, the minority shareholders were of the view that Praxair was benefiting at the expense of Linde India, and that's why it was not showing in the profitability of Linde India, and that's why they had commented against it. And now SEBI has initiated an order here, which is in favor of minority shareholders. They've taken that request ahead, and that's why it's a positive for them.
All right, Sonal, thanks very much for that. Small business finance is the next one we're focused on. And the reported numbers, Vivek is here with details. Vivek.
Well, the reported numbers dipped for yesterday. Yesterday, we accessed a term sheet where actually we are seeing a very large block deal that is likely to happen in the session today itself. So 3 promoter group entities. The first one is 845 Services, Output Capital and Output Partners. These 3 entities together hold close to 5.45% stake in the company. Now, this particular offer is priced in the range of 87.5 to 91.65 rupees a share. Now, at the the upper end of the price band, which is the current market price of the company, the total equity or the total size of the value will be a little over 530 crore. Now, remember, after this particular block deal goes through, all of these 3 entities will not be left with any stake in the company. So it's a clean out trade. Post this, expect the stock to recover, given the fact that it was a bit of overhang on the company.
Lovely. Thanks a lot for that, Vivek. Well, Abhishek joins us to tell us about a couple of more banking names. Morning, Abhishek.
Morning, Nigel. So, UCO Bank has made good use of the low CD ratio or low credit to deposit ratio with respect to boosting their net interest margin as well as profitability. And our growth is at 10.9% YOY and about 10% sequentially. Net interest margin has jumped to 3.03% versus 2.84% in the previous quarter. PAT is down 9.5% YOY, but it's increased 4.5% sequentially. Deposit growth is just 5.5% YOY and about 2.7% sequentially. But look at that loan growth, 16.8% YOY and 4.5% sequentially, which means that their CD ratio has actually improved both YOY and quarter on quarter. The board has also taken given an approval for fundraising via 400 crore shares, which at CMP would translate roughly to around 23,400 crore worth of capital being raised, if at all the bank intends to do so. Jana Small Finance Bank, strong quarter over there. Deposit growth is at 38.2% YOY and about 8.5% sequentially. The AUM growth is healthy at 25.5% YOY and about 4.5% sequentially. Asset quality has improved. The net interest margin is improved YOY for the FY24. So for FY24, net interest margin is at 8%, which compares to 7.8% in the previous year or in the previous fiscal. NI is up 26.5% YOY and about 7.7% sequentially. They have a huge tax write back of 155 crore, which has boosted the profitability this time around. Back to you.
All right, Abhishek, thanks for that. So, I mean, lots and lots of banking and financial results, right, this week. And that continues. But more K FinTech and Vesuvius India are the next two that we've got on our radar. Vamakshi has got those. So, Vamakshi.
Well, good morning, Prashant. Let me first start off with KFin Tech. The company has reported an inline set of numbers. Overall, average AUM at almost 17.4 lakh crores saw growth of almost 11%, much higher as compared to the industry. The equity average AUM, however, saw a growth that was slower than the industry, and as a result, the equity average AUM market share actually declined marginally to 33.4%. And this is important because the equity average AUM market share has been declining for 6 straight quarters. That said, revenue has seen an uptick of almost 4% sequentially. This was largely supported by a 7% rise in the domestic MF investor base, as well as the 27% jump in international and other investor solutions. This is partly offset by the decline that we saw in issuer solutions. EBITDA margins have also expanded for the counter, 103 basis points higher to 45.8%, and net profit has seen an uptick of almost 11% sequentially. And as a result, I'm going in for a mild green for KFin Tech. Apart from that, Vesuvius also on our radar. Strong set coming in from the company. Revenue saw an uptick of 24%. Margins have improved to 20.8% as compared to 14.5%, and in fact margins are at a multi-quarter high. Net profit has also seen a huge surge of almost 60% on a year-on-year basis. So on the back of that, going with a green for this counter as well.
All right, thanks a lot. In fact, the management of KFin Tech will be joining us in a short while from now, so do stay tuned in for that. Here's a quick recap of our top stocks with positive news flow: Poonawalla FinCorp, Linde India, SBFC Finance, UCO Bank, Jana Small Finance Bank, KFin Tech and Vesuvius India, while stocks with negative news flow: Canfin Homes, Birlasoft, Tata Chemicals. Let's also get a quick grip on what's happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action from the commodity market. Manisha, hi, good morning.
Morning, Sonia. Thank you for that. Well, I'll start with the crude oil prices, where there are Israel and Hamas ceasefire talks happening in Cairo, and the crude prices have seen some premium go off because of that. Also, the sticky U.S. inflation has dented sentiment around rate cuts. The markets are also reacting to the strong U.S. dollar, which is weighing onto the crude oil prices right now. All eyes now on the U.S. monetary policy decision on 1st of May, and the China PMI numbers, well, that are also anticipated. The China non-PMI numbers that came in today have expanded at the slower pace in the month of April, and that's weighing on many of the metal prices as well. So some profit taking is what we've seen happen across metals. Steel and iron ore especially have seen a decline. Within the non-ferrous metals, copper prices, though, have continued to trade near 2-year highs, holding at around $10,040 a ton even right now in Asia. In the precious metal markets, well, the month of April is ending as a third straight month of gains, where gold is gained up by 5% and silver is up 8% for the month.
Okay, all right, Manisha, thanks a lot for that. And manganese ore prices as well overnight did see a big surge. We had highlighted this last week itself. There's a disruption at an Australian mine that could keep prices elevated, and that's what's happened overnight as well. So some disruptions in Australia, and there's some kind of logistical problems in South Africa as well. So manganese ore prices moving up. Moil is normally the stock that we track out here. For the time being, we simply a short break. Up next, we'll have Amnish Agarwal or Prabhudas Leeladhar, who will be joining in with some fundamental stock analysis. Later on, we'll have the management of KFin Technologies, who will join us post their numbers. Stay with us.
Okay, welcome back. We've got the market open in about 11 minutes, the pre-open that is. We've got Mitesh and Sudarshan with us with what they'd want you to do as we start another session. Gentlemen, morning. Good to have both of you here. Mitesh, what do? Dash for a new high, keep going? Is there a fresh expansion in Nifty Bank? Just the overall view on things first.
So, morning, Prashant. Yes, I think, the Bank Nifty very clearly has given a sign of a fresh expansion. Also, it's just kind of broken into fresh highs. So, I think typically it should enjoy a good momentum. Now, the way to trade the Bank Nifty would be to hold on to your long positions if you have. If you have not, then you must buy something at least today and add on a mild pullback, let's say to about 49,200, 250 zones if you can get it. Though I think today the opening is slightly positive, so we might not get in the opening hours. But let's see, during the day, if you get a pullback, I would want to buy into not only the Bank Nifty, but a lot of banking names. So in that sense, I think the Bank Nifty should be the focus for the next couple of days to come by. This should also help the Nifty test the earlier highs of 22,730. In case we see the Nifty get past that, then I think we'll look at fresh targets on the Nifty as well.
Okay, fresh targets on the Nifty also. Sudarshan Sukhani is joining in. Sudarshan, that is really the talking point, right? The Bank Nifty and the way it's zooming. Would you concur with Mitesh that even now it makes sense to take fresh long positions in Bank Nifty and large cap banking names? And what's your overall call on the index?
Yeah, good morning. See, I would think that the Bank Nifty, while the market is in a strong trend for the banks, it's difficult to anticipate how much more the Bank Nifty will go up before it goes into a consolidation. Therefore, for me, it's the much better trade is to focus on some of the individual banks, which is what I have in my buy list. Large cap IT names should be bought into if you are a position trader or an investor. For a trader, a short-term trader, I think it's still an avoid. The Nifty remains a buying opportunity because of the so many numerous components that go in it. So the Nifty yesterday was a buy on dips and continues to be today. The Bank Nifty can be left alone and focus can be given to individual banks. So that's how I start. AU Small Finance Bank is a buy with a stop under 592. Bank of Baroda is a buy with a stop under 255. Hind Petro is a buying opportunity with a stop under 464. And since the list is all buy, TVS Motor is a buy. We are buying on a dip here with a stop under 1910.
Okay, all right. Mitesh, what about you? What are your picks for the day?
So I also have more of buying side calls. Axis Bank, I think, clearly ICICI and Axis look very strong to me. We had a buy on ICICI yesterday. So Axis is a fresh buy with a stop at 1140 for a target of 1200. PFC is a buy with a stop at 408 for targets of 430. And Grasim made a fresh high after 3-4 days of sideways activity. So good breakout on the intraday charts here. Buy that with a stop at 2360 for targets of 2450. One sell call, that's HCL Tech on a mild pullback, say around 1395, 1400 if you get it. Sell with a stop at 1425 for targets of 1340.
No PSU banks, Mitesh? I mean, SBI is looking pretty strong last 2-3 days.
I mean, yeah, definitely it's looking very strong, and we had a BTSC on SBI yesterday. So I've not given a call today, but yeah, I think we like that back, no doubt.
Okay, all right. Banks broadly doing very well. Thanks very much, Mitesh. Sudarshan, appreciate you joining in. And speak with you soon again. Soni Patnaik is Assistant VP Derivative Research at JM Financial. Soni, good morning. Good to have you here. So we were just talking about banks and the big move that we saw into fresh highs. What's the view, and how does one trade it from here?
Hi, good morning, Prashant. Thank you so much for having me on the show. So yes, Bank Nifty on expected lines. So as per the data, it was indicating that it can break above 49,000 congestion zone. It has done so. And it's pretty much likely that it can head towards 50,000 mark. Yesterday, Bank Nifty futures has witnessed very aggressive long built-up positions of 26%. And if we analyze the FI's data positioning also in the long shorts, we can see that, they've increased the positions more in Bank Nifty. So I think the index is yet to outperform here the other indices and can very much test 50,000 mark. So I think that when it does so, it will also help Nifty to test 22,850 plus levels.
Okay, any individual stocks you're looking at, Soni?
And good morning, Sonia. Definitely, I think the first week is, Bank Nifty is quite strong, and the stock that can continue to outperform will be SBI over here. We've seen very strong breakout. It's a fresh breakout. There's a good option chain breakout even above 820 levels. So SBI continues to remain a strong buy for targets of 860, 880 for May series, and keeping a stop loss of 800. So I think that's the first pick. And the second pick would be from the power space, NTPC. We can see it has given a very strong support of 345, 350. There are multiple good supports. So NTPC can also continue to outperform the targets of 390 and 400 for May series, keeping a stop loss of 345.
Okay, all right, Soni. Good to see you in. Thanks a lot. Wishing you a good day ahead. For the time being, we'll slip into a short break. On the other side, we'll get chatting with the banking space. Shantanu, the India analyst, BFSI, BNP Paribas, will be joining in to help us out with a quick analysis.
Co-powered by
Okay, welcome back. We've got the market open in about 11 minutes, the pre-open that is. We've got Mitesh and Sudarshan with us with what they'd want you to do as we start another session. Gentlemen, morning. Good to have both of you here. Mitesh, what do? Dash for a new high, keep going? Is there a fresh expansion in Nifty Bank? Just the overall view on things first.
So, morning, Prashant. Yes, I think, the Bank Nifty very clearly has given a sign of a fresh expansion. Also, it's just kind of broken into fresh highs. So, I think typically it should enjoy a good momentum. Now, the way to trade the Bank Nifty would be to hold on to your long positions if you have. If you have not, then you must buy something at least today and add on a mild pullback, let's say to about 49,200, 250 zones if you can get it. Though I think today the opening is slightly positive, so we might not get in the opening hours. But let's see, during the day, if you get a pullback, I would want to buy into not only the Bank Nifty, but a lot of banking names. So in that sense, I think the Bank Nifty should be the focus for the next couple of days to come by. This should also help the Nifty test the earlier highs of 22,730. In case we see the Nifty get past that, then I think we'll look at fresh targets on the Nifty as well.
Okay, fresh targets on the Nifty also. Sudarshan Sukhani is joining in. Sudarshan, that is really the talking point, right? The Bank Nifty and the way it's zooming. Would you concur with Mitesh that even now it makes sense to take fresh long positions in Bank Nifty and large cap banking names? And what's your overall call on the index?
Yeah, good morning. See, I would think that the Bank Nifty, while the market is in a strong trend for the banks, it's difficult to anticipate how much more the Bank Nifty will go up before it goes into a consolidation. Therefore, for me, it's the much better trade is to focus on some of the individual banks, which is what I have in my buy list. Large cap IT names should be bought into if you are a position trader or an investor. For a trader, a short-term trader, I think it's still an avoid. The Nifty remains a buying opportunity because of the so many numerous components that go in it. So the Nifty yesterday was a buy on dips and continues to be today. The Bank Nifty can be left alone and focus can be given to individual banks. So that's how I start. AU Small Finance Bank is a buy with a stop under 592. Bank of Baroda is a buy with a stop under 255. Hind Petro is a buying opportunity with a stop under 464. And since the list is all buy, TVS Motor is a buy. We are buying on a dip here with a stop under 1910.
Okay, all right. Mitesh, what about you? What are your picks for the day?
So I also have more of buying side calls. Axis Bank, I think, clearly ICICI and Axis look very strong to me. We had a buy on ICICI yesterday. So Axis is a fresh buy with a stop at 1140 for a target of 1200. PFC is a buy with a stop at 408 for targets of 430. And Grasim made a fresh high after 3-4 days of sideways activity. So good breakout on the intraday charts here. Buy that with a stop at 2360 for targets of 2450. One sell call, that's HCL Tech on a mild pullback, say around 1395, 1400 if you get it. Sell with a stop at 1425 for targets of 1340.
No PSU banks, Mitesh? I mean, SBI is looking pretty strong last 2-3 days.
I mean, yeah, definitely it's looking very strong, and we had a BTSC on SBI yesterday. So I've not given a call today, but yeah, I think we like that bank, no doubt.
Okay, all right. Banks broadly doing very well. Thanks very much, Mitesh. Sudarshan, appreciate you joining in. And speak with you soon again. Soni Patnaik is Assistant VP Derivative Research at JM Financial. Soni, good morning. Good to have you here. So we were just talking about banks and the big move that we saw into fresh highs. What's the view, and how does one trade it from here?
Hi, good morning, Prashant. Thank you so much for having me on the show. So yes, Bank Nifty on expected lines. So as per the data, it was indicating that it can break above 49,000 congestion zone. It has done so. And it's pretty much likely that it can head towards 50,000 mark. Yesterday, Bank Nifty futures has witnessed very aggressive long built-up positions of 26%. And if we analyze the FI's data positioning also in the long shorts, we can see that, they've increased their positions more in Bank Nifty. So I think the index is yet to outperform here, the other indices, and can very much test 50,000 mark. So I think that when it does so, it will also help Nifty to test 22,850 plus levels.
Okay, any individual stocks you're looking at, Soni?
And good morning, Sonia. Definitely, I think the first because Bank Nifty is quite strong, And the stock that can continue to outperform will be SBI over here. We've seen very strong breakout. It's a fresh breakout. There's a good option chain breakout even above 820 levels. So SBI continues to remain a strong buy for targets of 860, 880 for May series, and keeping a stop loss of 800. So I think that's the first pick. And the second pick would be from the power space, NTPC. We can see it has given a very strong support of 345, 350. There are multiple good supports, so NTPC can also continue to outperform the targets of 390 and 400 for May series, keeping a stop loss of 345.
Okay, all right, Sony, good to see you in. Thanks a lot. Wishing you a good day ahead. For the time being, we'll slip into a short break. On the other side, we'll get chatting with the banking space. Shantanu, the India analyst, BFSI, BNP Paribas, will be joining in to help us out with a quick analysis.
Co-powered by
Welcome back. Well, we have, I think, a couple of minutes before we hit the pre-opening rates. Amnish Agarwal is still with us, so let's get some views from him. Amnish, I wanted your thoughts on trend. The numbers came yesterday, which were, somewhere during market close, but they were really strong set of numbers. And this is one stock that has had it very good, right, over the last many days and weeks. At this price, does it still make sense to buy into trend?
You see, trend actually has done very well, and the momentum has been led by Zudio. So if you look at the entire apparel space, trend remains an outperformer. But in terms of valuations, I would say one will have to take slightly longer view because it is not longer that cheaper stock. But in the longer term, if the company continues to perform the way it is with a clear focus on West Side as well as on Zudio, I think in the long term there is still enough scope to make money in this stock. But in the near term, I think it might be now incrementally growing at a low pace. Okay,
all right. Abneesh, I wanted to ask you about MOIL. I don't know whether you track it, but it appears some of these mining-related stocks, they're actually beginning to outperform the ferrous or the non-ferrous names. Case in point being MOIL is done much better. NMDC has done much better as well, but now the price increase has come about. So any view on this? The reason I ask you is because manganese ore prices have been skyrocketing. There's a disruption in Australian mine on manganese ore, and because of that, prices have moved up. MOIL as well has seen a big rally. More in store or most of it in the price?
You see, difficult to say because we are not, you can say, tracking the stock very closely. But having said that, in all these commodity stocks, for example, particularly the mining stocks, the moves are generally led by what happens globally. And now, as you are saying, there is disruption in the mining. And if this disruption continues, say, for the coming few months, then there effects to the stock. But definitely the move has been very sharp over the past. I think it has happened in the last 10, 15 odd days.
Amish, just two more names. One is Supreme Industries. Earnings were pretty good. Stock ended, I think, 7-8% higher. Big volumes as well in trade yesterday. The other one was BSC, which went the other way. Sharp cut, ended 13-14% lower. Just your thoughts on these two.
You see, Supreme actually has been gaining a lot because of the tap water scheme, that is your Nal Se Jal scheme of the government. So they are getting actually a lot of orders due to that. So the volumes have been pretty good. And I think if you look at the entire piping space, I think two companies, Supreme and Astral, they have been doing very well. Now, given the fact that I think it all depends upon how much could be, you can say, the incremental spending as far as this particular scheme goes. Now, if the spending under this scheme particularly it continues to go, I think Supreme should continue to do well. And this is one company, if you look at it, has been one of the most steady players. So I think from that angle, it continues to look interesting in the long term. However, the move yesterday has been pretty sharp. As far as the BSC is concerned, I think it is more to do with the penalty which has been imposed upon them and they have been asked to pay. So I think this is more like, you can say, one-time event which has resulted in the cut in the strong price. The long-term fundamentals or the views on the stock, they pretty much remain the same.
Okay. I wanted your thoughts also on M&M. There's a new facelift that they've announced of the XUV 300, right? Attractive price point, about, the base price is around 7.5 lakhs. And in this segment, they are planning to sort of strengthen their entire offering in this SUV space. They, of course, do have the Thar, they have the Bolero, and now a facelifted version of the XUV 300 as well. How are you positioned on some of these names? The other major player in this space is Tata Motors. Of course, they have almost a 30% market share here. But in this SUV space, would you take fresh positions in names like M&M and Tata Motors?
You see, M&M seems to be very well placed because they have been doing well, particularly last year. If you look at the only two segments they did well was, one was your SUVs or PVs, and the second was your commercial vehicles. Now, I think if you are going to strengthen your presence in the entry to mid-level segment, which has been actually growing very fast and has replaced the lower segment of the, you can say, the entry-level cars, I think that is one space. If they strengthen over there, it is very big positive for M&M. Given the fact that now you will be strengthening your portfolio on the your PV side, plus this year monsoons are likely to give a boost to the tractor segment, I think M&M should do well from here on. Now, as far as Tata Motors is,
Go ahead.
So now, as far as Tata Motors is concerned, I think your commercial vehicle segment is not likely to show any spectacular performance over the coming, say, 3 to 6 months at least. However, given the fact that PVs are doing well and the JLR numbers are also likely to be better, the Tata Motors stock should do well from here. But I think clarity in terms of the performance, that seems to be better in terms of M&M.
All right. What we'll do is we will just talk about... we'll just go to Sudarshan. He's joining in now to talk about Birlasoft. So, just getting the pre-opening rates in now. Looks like it's going to be a strong start, actually. The Nifty is up almost about 60-odd points and plenty of stocks to talk about. On the downside, it's Birlasoft because of the disappointing earnings. So, Sudarshan is here to give us the latest on that. Sudarshan, over to you.
So Birlasoft has disappointed both on revenue and deal front in Q4. Revenue growth was at 1.6% versus an estimate of 2.2%, and FY24 total deal wins were up 0.9% and new deal wins were down by 3.9%. Brokerages have mixed views. Nuvama has downgraded the stock to reduce and says current valuation says 24x FY26 PE appeared expensive given flat contract value and with no margin expansion. It expects earnings growth to be subdued at 12% CAGR over FY24-26. Nomura, though, has retained buy rating but cuts target price to Rs 860 from Rs 950 per share. It says company has sufficient cash balance of $210 million and it gives company enough levers to invest in capability building. As far as company's statement is concerned, it says Birlasoft says it aspires to grow above industry average in FY25.
All right, so thanks very much for that. So we'll keep an eye out on the name as it opens up. We'll get an indication, I guess, in about 2 minutes' time by the end of the pre-open. About 2% or so higher. Tata Chemicals is the next one we want to revisit with Sonal. Sonal, money.
Well, yes, it was a very weak set, much lower than what the street was working with. Taking you through the numbers, revenues declined 21%, EBITDA was down 54%, margins have come in at a multi-quarter low of 12.7%, and the company has reported a loss of 827 crore rupees versus an expectation of a profit. This was led by one-time non-cash impairment in the UK soda ash business to the tune of 963 crore rupees. Even strip of that, profits are lower than what was estimated. Both the segments did not do well. The basic chemistry business, where revenues are down 21%, it was an EBIT loss of 682 crore rupees. In the specialty products, revenues were down 20% and EBIT loss came in at 40 crore rupees. In the conference call, the management did indicate that Q4 was impacted by US exports and Europe's soda ash prices, which corrected heavily because of oversupply. Key challenges continue to be seen in the European market, and Turkey as a market is seeing a big growth. It is seeing a lot of sales in the market, which is leading to oversupply as well. Kotak on the back of that has a sell rating, target price of 770. They think that this will be the quarterly run rate in FY25 as well, similar level of earnings. They've cut the FY25-26 EPS by 12 to 20%. They say stock has held up surprisingly well because of a possibility of a Tata Sons IPO, which they do not think will happen very soon. Additionally, they are talking about any large expansion in the battery chemicals business, which the street is hoping of to be misplaced. So they are not very bullish on the stock. The other stock which produces soda ash in the country in the listed space is GHCL. So we could see similar impact there as well.
Okay, thanks a lot for that. Well, I'm also looking at some of these banking names because yesterday was a big day for the banks. You had huge delivery percentages in many of these large cap banks. So look at the delivery volumes. ICICI Bank saw 1,400 crores of delivery in a single day. SBI saw 630 crores. HDFC Bank saw almost 1,400 crores. Kotak Mahindra Bank at 900 crores and Axis Bank at 700 crores. So a lot of money being pumped into the banking names. ICICI Bank actually was the star of the show last few days. It hit a record high yesterday. The stock is now up 16% in 2024 so far. And a lot of brokerages are bullish post the strong earnings. Morgan Stanley has an overweight with a target price of 1,400, a big upside to the current market price. The other stock, of course, that has been vying for attention is Axis Bank after the strong numbers. Up 10% in the last 1 month. Fresh high over there as well. Jefferies has a buy. They have a target price of 1,380 on Axis Bank. And after the issues that cropped up with Kotak Mahindra Bank, there's, of course, been more money flowing into these other names. But Santanu Chakrabarti, the India analyst BFSI at BNP Paribas, is joining us now to talk about this. Santanu, your thoughts first on the numbers that came in for the private sector banking space, especially names like ICICI Bank. Do you see more earnings upside and stock up move post these numbers?
Right. Thanks for the opportunity. So looking at the private bank numbers, the most interesting thing is if you look at the larger private banks, whether it's ICICI, whether it's an Axis, they seem to have posted better numbers than the so-called NBFC-esque banks like IndusInd. In the sense that, in this part of the cycle with borrowing costs hardening, you'd have assumed that some of the fixed rate high yield plays would have surprised positively on margins. That has not been the case. Axis has delivered a fairly large surprise. And what can we say about ICICI Bank? ICICI Bank seems to have taken that space within banking which HDFC Bank used to occupy in terms of, absolute predictability in terms of its numbers, a small beat across the board, and fairly strong growth on liabilities. I think their liabilities performance in the last few quarters is significantly improved over what it was in the previous financial year. So across the board, fairly strong numbers. And what is interesting for me is at least it should assuage at a broad system level some of the largest deposit-linked fears that investors seem to have carried. We didn't subscribe really to those fears, but at least now there's some evidence, especially in the case of HDFC Bank, that deposit availability is not going to be a problem, even in this part of the cycle, even though deposit mix may not be to the liking of investors.
I'll talk more about banks, Santanu. Morning. But just wanted a quick view on Bajaj Finance, because the last time we spoke, I remember speaking about that, right? And you were saying that, well, go by what the management is saying they will do. But the market, look at the stock reaction since. I mean, post earnings, I think it's down another, 5-6% or so from that point. So market's still a little unconvinced.
Yes, I absolutely agree. So, when I speak to investors on what are the 2-3 things that have ticked them off regarding this quarter's performance or where they feel, some of the, disappointments are, 2-3 things stand out. One is that, there's been a small upward revision in aggregate credit costs in terms of their guidance. That band has moved about 20 basis points. And second is the B2C retail part of the story. Is obviously they have indicated that they will pause on that a little bit. Now, when I spoke to you and in our investment argument even today, B2C rural does not form a very large part. See, Bajaj Finance is a company which is known for experimenting small and reacting quickly to the outcomes. I mean, people who have tracked this company for a long period of time would, for example, remember their foray into equipment financing. Which they tried. They figured out pretty soon that that's not a segment which was fitting in their core competence, and they exited quickly. So similarly, out here, you are looking at a total book which is about 5% of total. And I personally don't think that, their right to win in a rural segment is all that clear. we really are positive on the stock for the pipeline they have set up in terms of urban financing. Starts from consumer durables and nowadays even from two-wheelers, feeding into personal loans and then on to larger ticket loans. And our bullishness is around the digital capabilities, the omni-channel capabilities they have built in those segments, not the stuff they are trying to build at the periphery. The third point, which also some people brought up, is the idea. I mean, they use the word Atmanirbhar actually on their earnings call, where they said Bajaj Housing and Bajaj Finance would have independent existence. But I think even in that narrative, they have made it very clear that Bajaj Housing will remain the exit point for the customer pipeline build of Bajaj Finance, and Bajaj Housing's sourcing will always have a significant proportion of Bajaj Finance customers. So, I mean, in some sense, whether they are independent or not, they will remain feeder and recipient relationship in terms of customers in the upsell process is very much going to be there. So, I think markets a little, are probably overreacting a little bit to what is a small blip. See, here's the crux. What is their FY25 guidance? It's 26 to 28%. So what are we talking about at 23p? I think that deep correction represents a very large opportunity.
Okay, all right, just hold that thought, Shantanu. We'll get in our 9-10 call and we come back to you. Sudarshan joins us. Sudarshan, give us your 9-10 call.
Hind Petro, consider buying Hind Petro with a stop under 464. Got it.
Thanks for that. Mitesh, what about you?
Well, I'll go with the buy on Axis Bank for targets of around 1200.
Okay, all right. Thanks, gentlemen, for joining in. Well, Shantanu, coming back to you, the two poster boys of the banking space in the last 10 years or so were Kotak Mahindra Bank and HDFC Bank. Big wealth creators. But in the last 3 years, they've been relative underperformers. A lot of investors wonder, these were the best in class, best valuations, they used to get those premium valuations. But now they're not very cheap and still they have a couple of headwinds. What's your view on both these two names, particularly Kotak Mahindra Bank and HDFC Bank?
Right. So as I said last time on your show also, on HDFC Bank, we remain very bullish. Kotak Bank, we have actually downgraded to underperform in reaction to the news. We always had a neutral. See, our concern in Kotak Bank has always been that in the last 3 years, the entire low levels of capital productivity of the core banking business has caught up to it. And that's primarily because the leverage is very low. So the bank was trying to solve this through higher growth. And right at this point, this development happens. Now, whatever else may be the impact of this development, it's clearly not a positive or a confidence builder on growth. And having seen historically the reaction of Kotak Bank to even a smidge of uncertainty, if they reduce their growth guidances, I wouldn't be at least surprised at all. More importantly, you see, Kotak Bank in some sense was the place where the banking investor went for safety and security. And they were willing to pay a premium for it. This company has been forgiven low ROEs for a long time, overcapitalization for a long time, slower growth than peers, other than the previous 3 years, for a long time. What it had going for it was the idea that, this is a bank that overreacts to the slightest perception of risk. And this development does that idea no favors. And that's what really the worry about. Our downgrade is on increased risk premiums.
Got it. All right, just one quick word on Axis Bank. The company had said that they are expecting to grow at 400 to 600 basis points higher than the system credit growth. Do you expect to see outperformance of Axis Bank compared to other banks very quickly?
I mean, Axis Bank on their segments like SBB, rural, etc., what they have posted on a sequential basis in terms of growth has delivered, it's a 5 basis point margin expansion is actually a 10 to 15 basis point beat on margins on most people's expectations. And that's not come from the liability side. To bring that in from purely asset mix in a quarter like this, it is unbelievable. Now, obviously, what are the asset quality developments of this growth in slightly higher yield segments, etc., will pan out over a period of time. But for now, it's great tailwind.
All right, Shantanu, great conversation as always. Thank you very much. We're running into market open, so we leave it there for now. Appreciate it. So that's Shantanu from BNP with his view on banks and NBFCs like Bajaj Finance as well. Market open on your screen. We're up 30 points. 22,671 is where the Nifty is starting this morning. 74,743 is where the sensex is at right now. And of course, since banks saw that big breakout yesterday, I mean, I think they'll naturally be in focus. 49,400 is where we are at, absolutely flat. So yesterday, private banks, more than anything else, is what did the trick for the Nifty and the Bank Nifty as well. PSU banks were doing well in any case, but private financials also picked up. Mid-cap index is up 1/3%. And you've got the small cap index, which is starting even stronger with a 0.5% pop. So that's the picture. 30 points, though, to begin the day this morning at 22,675. Sonia has got stock-specific rates. Sonia.
Well, thanks a lot for that. I think it's all about banks, right? As you rightly pointed out, it's a big move that we're seeing in the banking space. Let's take it straight to ICICI Bank. Remember, the last few days has been very good for ICICI Bank. There's been large delivery buying of 1,400 crores yesterday. The stock is sitting at a record high. It's up 16% in 2024. So now it's just, consolidating around that 1,150 mark. Let's take it to HDFC Bank as well. There was large delivery buying yesterday of around 1,355 odd crores. So just consolidating around these levels on HDFC Bank this morning. Indigo is also on my radar today because there is an analyst meet that happens later in the evening at 5 p.m. The stock is at a 52-week high. The company will talk about, business with regards to the new orders, etc. So Indigo chugging higher about 1% over there. Birlasoft has been disappointing in terms of earnings, but the stock is not seeing a major reaction right now. The revenue and the new deal values were under a bit of pressure. Revenue growth was barely 1.6%, and that's something that the street doesn't like, down about 1.5% on the stock. Trend came out with numbers yesterday during market hours, but look at the up move this morning. 4% higher. Generally happens with Trend where, the next day there is a lot of follow-on buying in the stock. Good revenue and EBITDA growth, and the stock as we speak is at a fresh record high, up almost 4.5%. I'm watching for Ambuja Cements very closely. The earnings are coming out tomorrow. Remember, after Ultratech Cement's strong numbers, all eyes will be on Ambuja Cements, whether they can perform well this time, and there is a positive bias on that stock as well. Poonawalla FinCorp is another set of numbers which the street definitely would like, 2.5% higher now. Strong AUM growth of 55%. Shoppers Stop is another one. The profit growth has come in at 62% for Shoppers Stop. The stock is up almost about 3.5%. And NMDC has hiked lump ore prices by 400 rupees and fines by 200 per ton. So NMDC is up in the green as well. I'm also watching out for M&M. There is a refreshed version of the XUV 300 that they have launched at a very attractive price point. And this is one space that is doing very well. Just look at M&M chugging along now, 2.5% higher. So definitely the street likes that. But what I like for the bulls is what you're seeing here, which is a 50-point up move on the Nifty. This is on top of the recent rally that we've seen. So clearly the bulls are in a firm control of the market and lots of stocks to talk about. Back to you.
Well, let's talk about some of those stocks. And Sonia, Vesuvius, that was the stock of the day I highlighted earlier today. It already has a big run. It doesn't trade very, very cheap, but these numbers are beautiful. Very, very good set of numbers. Margins coming in at the best we have seen in the last 10 years or so. So that's why this expensive stock is getting even more expensive. It's now up close to around 14%. Jana Bank, that one is up more than 10% as we speak. Big up move is what we're seeing on that one. The other big gainer is Kalpataru Projects. Well, that stock is up close to around 9%. Volumes picking up on that one as well. KPIT Technologies, well, we had the management that was talking about a good growth that they're looking at, 15 to around 20%. And if the markets are good, which they are, then they can do margins of close to around 45%. So explains why that stock as well is up and about in today's trading session. What else is not doing too well then? You have Tata Chemicals. The numbers didn't look very, very good. That's one of the top losers, down close to around 3% as we speak. Patel Engineering, a few days ago, they went ahead and they had raised some money from the market. I'm not sure whether or not, some of the shares have got credited. So the short-term investors, they're looking to cash out, and that could be one of the reasons why it's one of the top volume losers on the downside, down close to around 7.5%. SCI Land, that's the other one that sees very volatile moves. That stock is down close to around 4% as well as we speak. Another gainer that's reacting to numbers is Canfin Homes. The stock is up close to around 2%. And Jyoti Structures, they were in the midst of doing a rights issue. Well, that one had a fair bit of interest. The stock is up close to around 5%, one of the top volume movers in today's trading session. So it's a good start. The Nifty Bank for the time being is more or less quietish after the big move that we saw in yesterday's trading session. But the Nifty, it has a date with 23,000 odd, and it appears it's making its way out there.
All right, so 22,700 now on the index. So 75 points more from here, and you're essentially going to be at the previous all-time high. 22,775 is where that sits at. Just a few other names, right? Trent, look at that run go. 7% gain on Trent, and it is a #1 volume-led gainer across the market. 500,000 shares, over 500,000 shares traded, and that is quite something, right? The #2 name by volumes is BSE. BSE yesterday made a low of, what was the low? 2,600. From 2,600, it's come up to 2,840 with a it was up 4%, so it's cooled off a little bit, 3% right now. But again, lots of interest, 500,000 shares traded there as well. Nigel pointed out Kalpatru. Look at KEC as well. KEC is up 4.5%, 764 on KEC right now. Hindustan Zinc, I think we did point out, 2.25% higher. Keep an eye out on CMS Info. It starts about 2% higher. Godrej Industries is up another 2.5%. It's had a very good move. Gillette India is up 2.75%. Jayaprakash once again is coming up. Yesterday ended flat after starting about 4-5% higher. So keep an eye on that one as well. Big volumes for this point in the day. And I think on the downside, it's Patel Engineering, which we pointed out, with an 8% cut. SBFC, of course, that large block has gone through. It's down 3. Tata Chemicals has recovered from the low. It's down 3.5. Birlasoft is down 2.5. Yes Bank is down about 1.25%. And KPIT Tech reported very good numbers. We just have the management with us in 10 minutes or so. The guidance looks very good. And the only thing which people are complaining about, of course, is very high valuations. But that's the case with many. So for now, we got about 35 points on the index. Anand Shah is head of PMS and AIF investments at ICICI Pru Asset Management Company. He's a market master of the day. Anand, good morning. Good to have you with us here. Thanks very much. Banks have been consolidating. Yesterday, a flurry of activity, new high. In your opinion, are we likely to see a fresh, meaningful expansion on the upside, led by private financials this time?
Hi, very good morning. Yeah, I think valuations were reasonable. We've been seeing quite a lot of euphoria in various segments of the market, but one area which was particularly the private banking had sort of been a laggard. Valuations were reasonable, and overall, market sentiment made sure that this undervalued or the so-called reasonable valued stocks are also now getting a late look, but they're getting a look from the investors.
Right. Well, for now, there is a lot happening in the market. So the headline index may not, really indicate the kind of traction. It's flat with a bit of a positive bias. But look at individual stocks. M&M is your top Nifty gainer right now. We were talking about that facelift version of the XUV 300. And the pricing is very competitive, actually. It's starting at 7 lakhs all the way to about 15 lakhs. And this space is hotting up, right? I mean, you have so many UV launches. The market share, this entire compact SUV space now constitutes about 50% of the UV volumes totally. And there are large players like Tata Motors, etc. in this space as well. Anand, welcome to the show. Consumption is booming, especially in the high end of the market, right? The premium side of the market. Do you think names like M&M, Tata Motors deserve to trade at these valuations? Or do you think that there could be more on the upside here?
No, it's a very interesting that you're saying consumption is booming, because obviously there is exactly opposite side. You have consumer companies which are complaining about the slowdown in rural consumption. So yes, this has been the story where there has been a K-shaped recovery. More so, if you see within consumption also, services, the consumption services have been picking up fairly strongly for us. We've been sort of looking at organized retailing. You touched upon Trend just now. So those are the areas where people are gaining market share. So very clearly what is happening, you have select consumer stocks which are underperforming a lot, who are actually losing market share. At the same time, there are consumer-facing businesses which are gaining market share amidst inflation, which has been sort of a pain for consumer companies. They're still doing well. So it's more bottom-up. If you see market, as you rightly said, is not straightforward. It is at the levels where they're almost near all-time high. Valuations are no more as compelling as they were 3 years back, 4 years back. And to that extent, the way forward would be bottom-up, way forward would be stock picking. And within that, clearly market is in the mood to reward the market share gainers at the cost of market share losers.
Okay. Hi, Anand. Good morning and good to see you in. Anand, what about tech? I don't think it has too much of a weightage in your funds. At least that's what, I can see. Tell us, what kind of weightage do you look to increase it, given the kind of results that we saw? At times, it's a good place to hide, but the numbers have been fairly mixed out there. So what's your approach out there? Would you add it to the contra fund?
So again, look, most of the businesses, so there's a lot of things that have changed in the last 4 years. If you see prior to 2020, we were struggling to find businesses which would do well. We were struggling to find, especially outside consumer-facing businesses, who would have profit growth rate. They were all leveraged. Today, a large part of market is doing well. Over the last 4 years, we have seen a significant deleveraging among many leveraged businesses in manufacturing space in particular. And to that extent, the investors are spoiled for the choice, right? And that's where obviously IT businesses are great. They generate a lot of profit at a very high ROE. Over the last few years, they've been also rewarding investors with dividend and buybacks, paying out almost 80% plus of the profits to the shareholders. But the challenge is growth. The growth is challenged. And what happened in 2020, 2021, when we had a surge in IT spending by corporates at large globally, we also took the PE multiples for these businesses at a very high level. So I think what you're seeing over the last 18 to 24 months is more of a mean reversal of the PE multiples, more correction in line with what these companies can grow. And to that extent, it's a wait and watch for us. We've been sort of not owning IT for the last 18 months. We're still looking to see what is the right time to own it.
A few of the names like Thermax is up. Some of the names which were not in the mix in the morning. 4% on Thermax. There is stocks at 46.35. HPL Electric is up 6%. And these got volumes, right? They're not going up on low volumes. There is CET, which is up 4%. 26.27. Maybe look at other tire companies as well. Spandana is up 3%. And Satin Credit Care is coming up with a 3% pop. Medanta is up about 3%. So it's expanding very fast. The breadth of the move that we have right at the word go. Market breadth still 3:1 in favor of what's going up right now. Anand, let's look ahead, right? What's the assuming there is political continuity? What's the, as most opinion polls are suggesting, that's it's a question of numbers if you go by them. What are we going to see the big focus on, in your opinion? Because government focus on key sectors has been a big sort of tailwind. It's helped with investment thesis. What to your mind is going to be top of the list?
Indeed, I think the trend is very clear. As a country, we've been a large consumer of goods, but not very large manufacturer of goods. And that is something which, is changing. I think if you see last 4 years, inflation has been the theme globally because China is no more want to be the factory for the world or cannot be the factory for the world. And to that extent, somebody has to pick up the slack that will be left as China lets go a lot of commodity and low end of manufacturing. I think we are, as a government and as a country, we are geared to get the manufacturing going in this country after a long time. And I think if you see the names of the companies that we discussed today in manufacturing allied, capital goods, these were something which were not discussed in 2020 or before that. They were almost lost decade for them. So I think we've just seen the early signs of recovery in manufacturing and the allied businesses. I think we have yet to see a lot. The private sector has deleveraged a lot. They have not really started the capex. And that's what the opportunity is. China +1, the Europe +1. And this is the right time when the corporates will actually start doing capex, not only for the domestic consumption, import substitution, but also for the exports. So I think we are very focused. Look, market is not cheap. These are not stories which are unknown. And to that extent, you'll have to be really bottom up. This is a wicket which is not batting wicket sort of a thing. It's tricky. It's a spinning wicket. And to that extent, stock picking will be important for last 4 years and next 4 years.
Okay, all right. We will leave it at that. Thanks a lot for joining in. Appreciate your time here on CNBC TV 18. Well, that's a word coming in on the market. It is not a batting wicket, so it's a bit tricky for the market now. The mid-cap index is actually up 256 odd points. The sensex is very flat, but just holding on to the gains for the last many days. Prime Minister Modi's next target is zero electricity bill and wants solar panels in every household. In a mega exclusive interview with News 18, Prime Minister Narendra Modi talked about his government's push towards the power sector. Let's listen in and then we'll take this discussion forward.
हमने बिजली पहुंचाने का बड़ा अभियान चलाया, बिजली पहुंचा दी। अब मेरा लक्ष्य है पीएम सूर्यघर योजना और जीरो बिजली बिल, और मैं हर घर पर सोलार सिस्टम लगे, और मैं सिर्फ बिजली का बिल जीरो चाहता हूँ इतना ही, मैं 3 चीज़ें चाहता हूँ। एक, हर परिवार का बिजली का बिल जीरो हो। दूसरा, अतिरिक्त बिजली जो हो वो बेचे, कमाई करे। जमाना इलेक्ट्रिक व्हीकल का आएगा। मुझे आत्मनिर्भर होना है एनर्जी के सेक्टर में, और इसलिए मैं चाहूँगा जिसके पास भी स्कूटी हो, मोटर हो, जो भी हो, उसका चार्जिंग अपने घर में ही हो जाए और सोलार से हो जाए। मतलब आज उसका जो ट्रांसपोर्टेशन का महीने का 1000-2000 रुपया खर्चा आता है वो भी जीरो हो जाए। ये त्रिविध बेनिफिट नागरिक को और देश को, पर्यावरण का बेनिफिट, देश को आज पेट्रोलियम इंपोर्ट करने का जो अरबों डॉलर जा रहे हैं बाहर, वो बंद हो जाएगा। तो मल्टीपल बेनिफिट वाला योजना। अब जैसे स्टार्टअप हब, मैन्युफैक्चरिंग हब बनाना है, मुझे इनोवेशन हब बनाना है।
All right, that is Prime Minister Narendra Modi. Clean energy is definitely a big focus area for them, and they talked about the PM Surya Ghar Yojana as well. Neeraj Kuldeep, who's the Senior Program Lead, Council on Energy, Environment and Water, and Nikhil Nigania of Bernstein join us now to talk about, how realistic, how viable this project is. Neeraj, let me start with you, right? What are the thoughts on the PM Surya Ghar Yojana? And also, while clean energy targets are quite commendable by the government, thermal energy is also here to stay. So how do you manage that kind of ambition going forward?
Right. Thank you, first of all, for inviting me here. As we know that the solar energy ambitions were really started in 2014, and we have come a long way, but rooftop solar sector wasn't picking up well over these last 10 years. And PM Surya Ghar scheme is, now trying to provide the necessary impetus that is needed to really scale up the kind of success we have seen in the utility scale solar, the large scale solar. We want to replicate that for rooftop solar as well and have almost 10x growth in next 3 years, right? And to respond to your second question, India is rapidly urbanizing and the economy is growing. And along with that, the energy consumption in the households is also rapidly expanding, right? The people are installing ACs, they are buying EVs. So how do we substitute this new demand that will emerge from the residential or household sectors? That's where the rooftop solar will play an integral role. So it may not be directly helping us substitute, but indirectly by substituting the new energy demand that is likely to come up in the next decade or 2 decades, can be powered through rooftop solar installation. So again, even from the perspective of reducing dependence on coal, rooftop solar in the residential sector is likely to be quite crucial. And in that sense, it brings, the scheme is at the right time and, with the multiple benefits that it outlines in the medium to long term. Yeah.
So is it fair to assume that we have enough internal resources in order to meet this growing power demand, Neeraj?
Right. So far in India, the energy demand is growing about, 5 to 6% annually after the pandemic, and India has been able to meet the energy demand. And if the question is around whether we will have enough domestic manufacturing to produce 30 gigawatt of solar, the target that has been set for PM Surya Ghar scheme. That again is in the pipeline as part of the PLI schemes. A lot of domestic manufacturing is coming up, and actually it will be much more than what we could consume. So the PM Surya Ghar scheme will actually facilitate increased domestic demand to support the manufacturing.
Gentlemen, morning. Nikhil, not that it can't happen first here, but has this happened? Has this sort of been done anywhere else in the world? Rooftops at a country scale?
So if you look at China, for example, the quantum China added last year was much more than even the utility scale solar that we had in India. So China has done this at a massive scale. So we could do this as well. I think it's a noble aspiration to have. But we'll have to clear some roadblocks in the way. For example, net metering is something which would be critical for this scheme to get implemented. Because for households, a big amount of energy consumption happens in the non-solar hours, which is the evening hours when you turn on the air conditioners, for example. So we'll have to implement schemes like those as well in sync with this to ensure the success of this. But yeah, to your question, it has been done at this bigger scale in some other countries. Yeah.
This net metering, I mean, we have that in some parts, right? I mean, I think Delhi has this, right, Nikhil?
Yeah, so it's a state subject. So some states have it, some states have not implemented in the full way. So that is something that needs to be seamless for this scheme to be successful.
All right. Hi, Nikhil. Good morning and welcome to the show. Nigel on this side. You know, some companies are not very keen on adding thermal capacity. In that sort of a backdrop, would you prefer generation companies or transmission companies or maybe smart meters as well? Would that be the way to play it? Who would be the key beneficiaries?
So power sector, if you talk about comprehensively, see, even for what the statement which came out yesterday, the bigger goal is to reduce energy import dependence. And power sector, if you talk broadly, there are two big themes which are playing out in India and actually most part of the world. So the one big theme is the transmission capex. So in most parts of the world, whether it be US, Europe, and India, incrementally we think as well, transmission will become, the grid will start becoming a bottleneck. So one will need to do a lot of capex to build up the grid, where the beneficiaries are transformer manufacturing companies, for example, or even the installers like Power Grid who own and develop those assets. The second big theme is the evening shortage theme. So now as schemes like this, like rooftop solar, support the afternoon supply of power, we still need power in the evening time. And to your question, yes, that's where thermal power companies also come in. So as capex cycle spread across this theme of transmission capex, and be on the generation side, both energy transition and conventional generation like coal-based generation will be needed in India going forward. So
okay. I wanted both of you to comment on this, Nikhil as well as Neeraj. So Neeraj, I'll go with you first on EVs, right? Of course, this is a theme. EV adoption is a big theme globally, not just in India. But now there are certain issues cropping up because of the perhaps EV capital costs are rising on account of, lower prices price points at which EVs are selling now. There is poor visibility on government policies as well, and there is a shortage of, say, rapid charging stations. It seems to be a global issue, not just in India, but particularly for India, Neeraj, what more do you think needs to be done in EV adoption from on the power side?
Right. So on the EV adoption, if we look at the adoption trends, it's happening in the large commercial vehicles for the public transport, the buses, and they are there. And dedicated charging ports have been established in conversation with the electricity utilities across states. But if we look at from the consumer's perspective, a lot of adoption or significant adoption is happening in the two-wheeler segment, right? These two-wheelers are being charged at household level. And there are, policy certainties that are needed on one side in terms of whether the consumers will have to pay a different tariff to charge these electric vehicles, or whether they can, still avail the cross subsidy that they get as part of the electricity for residential sector. Along with that, we also need to look at the infrastructure requirement. So a lot of, the charging infrastructure has to come in place. But more than, building this charging infrastructure, we also need to energize these charging infrastructure, which is what will pose the challenge going forward. as Nikhil was mentioning, a lot of investment also has to happen in the distribution infrastructure, because along with the EVs, there comes the unpredictability when these individuals are going to charge their vehicles. The moment they plug in their EVs into the grid, suddenly there will be a spike in the power demand. So how do we manage that, and whether we have the infrastructure there? So that's something we will have to solve as the EV adoption is growing.
All right. All right, gentlemen, appreciate you joining in. We look forward to having a longer chat with you all as the elections do approach. Thanks a lot for that. Well, let's move on. Let's talk about the stock of the last 12 months or so. On the stock of yesterday, KPIT Technologies reported very, very good set of numbers. Mr. Kishore Patil, the co-founder and CEO of the company, joins us on the show. Hi, Mr. Patil. Good morning and good to see you win. Well, I wanted to ask you with regard to this guidance of 18 to 22%. Are you being a little bit conservative? And I ask you this is because last year when we chatted at the start of the year, first you were talking about 27 to 30%. Then you went ahead, you tickled the street and you said we'll do 37%. But you ended up with closer to around 40%. So is this 18 to 22% being a little bit conservative? And also I wanted to ask you about these margin guidance of around 20.5%. You've taken into account the ESOP cost. I think it'll shave off close to around 100, 150 basis points. So this is X of that, right?
Yes. So I will answer both the questions. So good. I think we are happy first with the year which has gone by, which is very important because that's how we get into the next year. And if you look at the last quarter, we had pretty significant wins to 61 million. So on the back of that, we see a good kind of visibility. As you know, the environment is uncertain. We are not seeing any reduction in spend, etc. But the companies are spending where there is a really critical projects. And we fortunately are more or less working mostly with the critical projects. So based on that, we just believe that in this kind of environment, we can take a call in terms of what we have in hand and where we see only high probability pipeline. Based on that, we take the inputs. I mean, we are not, we have a system and process by which we go every quarter. So based on that, we do it. In case the other difference between last year and this year is we had signed, we had just started to mega engagement and we were in a position to ramp up pretty soon. So that had helped last year initially. So from looking at both this perspective, I think this is based on what we have today and where we have a high confidence kind of pipeline. Based on that, we are giving this.
So this is...
yes, go ahead, sir.
And in terms of profitability, I think we have always maintained that we believe that after we have crossed a certain 20% plus profitability, our first priority to invest into future growth, whatever is the critical, whether it is technology or people or whatever are the critical parts of the business. So this time we have done this 100 crore plus investment, and this 20.5% plus is post considering the cost. So this is the additional cost which we have factored in.
Okay. Mr. Patil, you said that you won two big deals this quarter, the quarter for which you've reported numbers, right? One, I think, in Asia, one in Europe. And I heard you said the guidance is based on what is already in hand and also what you expect to win from the pipeline, right?
Yes, high confidence pipeline, yes.
Okay, that is a normal kind of way of giving guidance, right? You would have a sense of what you expect to win.
Absolutely. Yes, absolutely. That's what we do. Yeah.
Okay, and how large is the pipeline? I mean, if you can talk about that. And these orders that you won, what is the total size of the orders for that you won in the fourth quarter? Yeah.
No. The 261 million is the pipeline which we have won. Every quarter we publish what is the pipeline we have won, right? What are the deals we have won? Pipeline, it's basically deals won, engagements won during the quarter. So it is a 261 million during the last quarter.
Right.
Now, I think the first point I want to tell you again and again, see, we are engaged with set of clients. We are not a project-based organization, a deal-making organization. We have a very long-term engagement. And wherever there are critical projects, we are engaged with the long-term critical projects. So that's why it is not a deal or anything. We have a business which continues to grow. And that's why we are in a position to give even this time, during this uncertain time, a reasonable kind of a visibility of the revenues. The point is, however, that we don't know whether there are any new proposals, etc., at the second half of the year, how it will pan out, what is the situation there. That's why we have taken most considered view of today, where we are and what we have in hand in terms of engagements.
No, when I say pipeline, I mean not what you won, but what you said, right? What you have a high probability of winning, which has gone into that guidance. So is there a way to quantify that or not really? I mean, since you said it's not deals, you kind of, yeah.
Yeah. It is difficult because it is also multi-year, whether it starts on a particular date or it starts 3 months later. I mean, there are too many variables. That's why we don't talk about it. Otherwise, unnecessarily different models come up.
Okay. Mr. Patil, hi, this is Sonia here, and thank you for joining us as always. A couple of more questions, right, on what the inorganic strategy for the company is. Do you have any big strategic bets that you're going to focus on in the next couple of years? You have about 850 crores of cash on your books. So any acquisitions that you're looking at?
So I think the first thing is, I always say, my first priority is organic growth. And fortunately, I mean, last year has been, if I may say, the best year of the company. Very high growth overall, qualitatively. Even if you look at anything qualitative, people, etc., it has been great year. Now, building on that, we have to be extremely careful that we don't do any mistake. Now, what we have to see is during uncertain time, there are always many opportunities come for acquisition. We will only look at the acquisitions which are in a technology area which is ahead of us. And there will be only a few niche areas that could be like that. And as and when it comes, we'll pick up, but these are unlikely to be very significant size.
Okay, unlikely to be a significant size. So you have that milestone, right? I know we repeatedly ask you this question, but you have put that target of $1 billion of revenues, which is your aspirational target. By when do you think you can achieve that? And also, if you do a conservative 20% growth, you will get to $1 billion by FY27. Do you think that's a realistic timeline?
Yeah, I mean, that's what we would like to go for. I mean, I cannot give a guidance, but that's exactly all my team works for. But we take every year, every quarter at a point of time. But certainly that is, it's not easy to continue to grow with this kind of a growth rate. But we see that as an opportunity for us, looking at the spend, where we are positioned and what we see at least today.
All right, Mr. Patil, but 1 billion will be when? Will it be in FY26 or will it be in FY27? I ask you this is because if you go by 20%, then it will be in FY27. But if you grow at 25%, which last year you surprised the street, this year you're saying 18 to 20% is a given. I don't know whether there's a possibility that you revise the guidance at some point of time. So $1 billion of revenues in FY26 is also a possibility?
So what I would say is my goal is 2027. Internal, that's what looks possible. But we cannot guarantee anything, but that's what we are looking for. And naturally, we are not going to play to that, right? Whatever maximum growth we can do, we will do that. See, in the meantime, this year, what we have done is we have increased the areas for growth. For a broad-based growth, we have added two things. First is we are going to focus more on Asia, certain areas like India, China. That's what we want to expand. We see an opportunity and we want to get into India for sure. We have already started, and also China. The second part we would like to do is industrial farm equipment as a vertical, which is really not a separate vertical, but very adjacent to what we do. And we believe that will just, in any uncertainty, we would like to have it a little more broad-based opportunity.
Okay, just one more question, sir. Mr. Patil, when you joined us in the past, you used to do 16-17% margins and they've been gradually improving. Now you're guiding for 20.5%. But that's taking into account, a big spend on ESOPs, which will shave off maybe around 150 basis points from your margins. So whenever you get to that $1 billion target, which as of now is 2027, there are enough levers in place to take your margin to say 22-23%? Would that be the goal as well?
We can certainly go to 22% at $1 billion. I know that, but but internally the way we think and we work is anything beyond 20%. If there is something which can drive our growth for future and something imperative, we prioritize that. But to your point, we may be in a position to do that by that time. Yes.
Mr. Patil, two more questions. One on net hiring, which has been a little sort of tepid this particular quarter. You've had many quarters of pretty strong hiring. Anything on that?
No, I think there are two things. One is we had a little, if I have to say, we hired quite a bit in the last 2 quarters. And now the hiring will again start. As you know, we have to hire more freshers during this year. And as many other companies are not hiring, that's our opportunity to go and have a great talent. So I think that will start after June, July. So that's where it will come. I'm sure that's what we will do during this year. We will continue to hire as much, if not more, than what we have done in the past.
You know, and on electric vehicles, Mr. Patil, we've discussed this before as well. Data shows that, growth in most major markets, both major regions actually, be it Asia, China, China is very, very high penetration levels, but Europe, US, etc. is kind of stalled. It's not moving forward. 6 months, 8 months, you're right there as a percentage of total vehicles sold in those countries. The EPA, for example, in the US recently came out with rules relaxing by how fast companies have got to move to electric to reduce emissions, etc. So kind of giving a slightly longer rope to legacy companies, ICE engines, etc. Just your thoughts, sir, in terms of, does this impact your business at all in any way?
So the first I will talk about that scenario, and then I will talk about our opportunity. The number one is I may just say, even if you look at China, there are only 5-6. There are 30 companies who do electric vehicles, but there are many companies who don't do. They are in conventional powertrain. And out of that 30, the battery electric vehicle is really the people who have mastered it in only 6-7 companies. So the point is, the market is growing in certain markets, and people will have different kind of technologies which are required for different segments. So for example, in China, the reason hybrids are more popular electric vehicles are growing, but hybrids are also growing. So it's not one for another. Both are growing. And the reason hybrids are growing is because the infrastructure in rural areas. China is also a big country. And the mindset of the people, the infrastructure availability, from that perspective, it is growing. So that is number one. Different companies have taken different views. So I don't think it is being driven only by compliance. Compliance was one big, I would say, push. But now it will be part of the competition. There are vehicles which are available at the same price as the normal vehicle, which are electric, and better, right? Because there is no maintenance cost. So in my view, it is not something which is government can regulate beyond a point. They can push a little bit, but they cannot. They can enable it by investing into infrastructure. But I don't think any government also wants to do it because first, fundamentally, with the Paris agreements, etc. So the companies will go for multiple options. They will do hybrid, they will do electric, they will do few other things. But the direction is sacrosanct. It will not have any impact on KPIT share. It will not have any share of business from this. Actually, if there are more programs, we see that as an opportunity.
Okay, all right. Thank you for your time and your patience and talking about the business at length. It was a pleasure speaking to you. By the way, the Nifty Bank is the one that's really soaring now. Just look at the overall market. Almost a century now on the index, the Nifty that is. The sensex is up 300 points. and the bank nifty is the one that's soaring. So we'll slip into a quick break. When we come back, B. Vijay Kumar, the Chairman and Managing Director of LG, Balakrishna and Bros will be joining in to discuss their fourth quarter earnings. Stay tuned.
Co-presented by Bank.
Welcome back. LG Balakrishna now is on our radar. Q4 was a mixed quarter for the company. The top line growth was about 16%. Profits expanded, but margins continue to be under pressure, down 100 basis points year on year. And that's why the stock is down about 2% as well. B. Vijay Kumar, the Chairman and Managing Director of LG Balakrishna, joins us now to talk about that. Mr. Vijay Kumar, thank you so much for joining us. You know, after 3 quarters of single-digit top-line growth, finally you've reached about 15-16%. But you have spoken about challenges as well in certain places like Europe in the past. So tell us, how is the situation on ground right now? And what kind of growth are you expecting in FY25 on the top line?
Expectation is different. We have to achieve a 10% growth every year. So that's what I've always maintained, that we will definitely do it and maintain the 10% growth.
Okay, so you are expecting to maintain the 10% growth, but by the end of FY24, you hit a 6.5% growth on the top line. Last time you spoke to us, you said that, you know, you're lowering your growth rate from 10% to 7%, and you've achieved 6.5%. Now, going into FY25, you're saying 10% is a realistic target for you?
We will continue to strive towards 10%. We are at 7%. Maybe we'll finish 8% or 9%. But the important thing is to maintain the growth with the profitability.
Okay. And the number you had given was 2,600 to 2,800 crores of revenues by the end of FY25. Would you stick to that target?
2,500.
2,500 crores.
Yeah.
Okay. All right. Hi, Mr. Vijay Kumar, and hope you're in good health and good to see you in, sir. Numbers are improving as we approach Q4. And you're saying that you're striving for 10% growth. Now, the question I have to you is about your facility in Nagpur. You know, it's been delayed a few times. There was heavy flooding as well. But the street is bracing for that getting commissioned. Has that facility got commissioned? Because that's the industrial chains unit. Has it got commissioned? And for FY25, FY26, what kind of revenues can you get just from the industrial chains?
From industrial chain, the current year, we have started with about 60 crores turnover. We will reach about 120 crores by the end of the year.
120 crores for this year?
Yeah.
Okay. So, and this 120 crores is included in this 2,500 crores of revenue guidance that you're giving us?
Yes, yes.
Got it. What does this mean in terms of margins then? You have said in the past that you would like to see margins scale up a little bit, but on a steady state basis, on an average for this year, what should it look like?
It's very difficult to project industrial growth because most of the industrial customers will be in Europe. And we have a lot of shipment problems and insurance increases. So it's not easy.
So we're not asking you for, I'm asking you for blended margins. For the company, what will it look like? Yes, there are challenges in Europe and industrial customers will come from there. But blended margins of the company would look like what?
Blended margin, we will continue to maintain about 17%.
Okay, continue to maintain 17%. Earlier, you had said the margin would be in the band of 19 to 20%. You don't think that is possible?
We've done 19% now, but looking at the future, I want to factor in because we will be foraying into solar energy also.
Okay.
So we've got some expenditure planned for solar energy, and there is a difficulty with shipping to Europe and other places. So all that balanced out, I want to maintain 17%.
Okay, you want to maintain 17% margins. Got that. By the way, that's J&K India's listing. Pretty solid there, 56% higher. More on that in a bit. We'll talk in greater detail about that. But, okay. Okay, big moves coming into that stock. But Mr. Vijay Kumar, last time you spoke about challenges in the European market. You're still talking about that. Is there any recovery there at all? And you also said the America business was quite soft because of strikes in the auto segment. Any recovery there?
America is maintaining. It's not going down, but it's definitely maintaining. It will improve. I expect to see a lot of improvement.
Okay, so exports as a percentage of your revenues was about 12%. Any plans to change that, take it higher over the next few years?
We've reached the last quarter, I think 16%. Yeah, 16%. So we should go to about 17 or 18%.
Okay. All right, Mr. Vijay Kumar, what about the promoter entity? You've mentioned in the past that there was a family member that was selling shares, but you want the promoter entity to hold close to 39 to 40% in the company. Do we expect some kind of action in this year? Will you be buying from the open market? Will there be a possible buyback where you don't participate? Could you tell us, is that likely to move up, promoter stake move up this year? And will there be a buyback?
It is likely to come up in the radar.
Buyback expected in FY25, is that correct?
26, I think we can legally go ahead.
With the buyback?
Yeah, I think the time, we have to have a gap of 1 year. So we expect to complete the rights issue by August. And that would allow us to go for a buyback next August.
So you'll have a rights issue that will take place, that gets over by August, and then next year you go for a buyback. Is that correct?
I'm sorry, not a rights issue. I'm talking about the preferential allotment that we did.
Right.
That will be completed in August.
Okay. And then, so this year that gets completed, and then in FY26 you'll be going in for a buyback, possibly, right?
Possibly, yes.
And your promoter stake will gradually start moving up towards the 39-40% target?
Correct.
Okay, just one more question from my end. RASL, that's the asset you were buying, and I think there were a couple of approvals that were pending. What is the latest update on that RASL asset?
Latest update is we've come out of all the legal tangles, but there are still some delays. We are in the driver's seat. We want to be designated the driver. So,
okay, all right.
We've nominated directors in the board and all that, but it still has not been given recognition. So we're waiting for relays on the government side.
Okay, fair enough. Sir, thank you for stopping by, and hopefully over the next couple of weeks and months, we will see an improvement in the situation for you. There has been some recovery in this quarter. Hopefully that will continue. Mitesh Thakkar is still with us. Mitesh, this is a very, very strong market, 100 points higher now in the Nifty and getting better as we speak. What are the markers for you? We are already at 22,700. What is the kind of move that you see intraday? And does it make sense to take a fresh long position even now?
Yeah, I think yes. Couple of things, So 22,750 was an hourly pivot, and then that was the hourly closing pivot, and we are right there. I think the way the structure of the Bank Nifty is, there's a good chance of us eventually breaking out with SBI leading the way, and therefore Nifty could go higher. So I think the way I approach it is if we start getting past 22,760, 765, I'll take a 50-point stop loss and take a long position on the Nifty. Hope that 22,950, 23,000 could be tested. With that, on the stock side also I have a buy on ABB. Keep a stop just below levels of 64.50 here. Look for target of 67.50. And Berger Paints, after a long time, is coming on the radar to buy. I think is reversing after a big decline. So buy here with a stop below 507 and a target of 530 can be looked at.
Okay. It's a good looking screen. 100 points now on the Nifty itself. So 22,745, 30 points away from an all-time high is what you have. 2:1 in terms of advanced decline to boot as well. We'll take a break and we'll come back with more stocks, etc. But commodities also is something we'll talk about. Manisha is going to be here for that in just a bit. Stay with us.
Welcome back. Well, let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at copper because the last day of the month and the month of April has been quite exciting and interesting for copper, where we are trading at a 2-year highs. And this is also a month that we haven't just breached $10,000 on the higher side, but we are trading above it as well. So if you look at this current week, we are up by nearly 6% for this week. 16% of a surge is what copper has made for this month, and we are up 23% in last 3 months rather. If you look at the all-time highs that copper prices made, well, that was at 10,845, and that was in March 2022. Which the street anticipates will be hit in this year itself. Well, there are very bullish cues going forward, and that is because of the support coming in from supply concerns, from mines, and of course, output cuts in smelters. That really seems to be supporting markets there. Also, the BHP trying to bid for accumulation of Anglo-American. Well, if that goes through, then that would mean that this together would control 10% of global copper supplies. So the markets are watching out this event, this development, proposals, rejections, and further proposals with a lot of keen interest there. The markets also are looking at the copper supplies, where we have seen lower coming in, also because of lower production guidance from Anglo-American for the year 2024. For 23 as well, they had missed guidance and production. So this year as well, when we are talking about lower supplies, the markets are taking it as positive. The China property developer Sci-Fi has agreed to restructure plans with the bondholders. The markets see that as positive. Well, we have seen the China manufacturing data for the month of March come in positive. The April numbers are anticipated in this week itself, and that would give you further cues onto that one as well. There also is a very interesting PwC report which says that 50% of the world copper mines will be in areas exposed to drought risk by 2050, especially for other EV metals like lithium and cobalt. They believe that 74% of those kind of areas would be exposed to drought. So we are looking at those concerns going forward as well. A very interesting report also coming in from Trafigura, which says that 1/3 of the 10 million tons of copper demand that is being anticipated by 2030 would all come in from EV, and that number continues to surge, and there are more updates and revisions coming in for that one. A very interesting number should come in on your screens, which tells you that the markets do anticipate that much of the demand growth would now come in for India, because when you look at the per capita consumption for copper, it's just half a kg in India versus 10 kg in China. Even the world per capita average is at 7 kg. So India completely lagging behind. So there are expectations that a lot of growth could really be coming in from here. The prices going forward, well, yes, the bull rally could just about continue, because $12,000 a ton is what Citi, Bank of America and Goldman Sachs are talking about. And various experts also say that if there is more incentive in investment has to come in sense of production and mining, then 12,000 is a level that copper prices perhaps would have to see.
Okay, all right, Manisha, thanks very much for that. So that's commodities and copper once again very much in focus. Well, Trent is the one which is actually up about 6-7%. People can. Mangalam was telling us yesterday about the sun, moon, and stars. Mangalam, morning.
Good morning. Yeah, so the sun and the moon are doing well. It's this time for the stars to shine right now, which is their non-Zudio and non-West Side businesses. And that's what, the brokerages are saying as well. This morning there have been upgrades coming in. Jefferies has raised their FY24 to FY26 adjusted EBITDA estimates by about 18 to 22%. They've built in higher growth and margins. They've raised their target price from 3,500 to 4,150, though they have a hold rating on expensive valuations, though they have a couple of requests to make to the management. The first one is that they're saying that the company's disclosures lead a lot to imagination, and they see merit in following best practices from group firms like Titan as well as TCPL. Nuvama is saying that the Star format, which is the Star Bazaar business, has shown a revenue growth of 30% in the fourth quarter with a like-for-like growth of 24%, and share of revenue from fresh products has increased from 13% to 16%, and they've upped their target price from around 4,300 to 4,900 as well, maintained thereby. Motilal Oswal says that it has been an outlier in the retail sector, which is otherwise facing a challenging environment, and as per their calculations, Zudio has grown 81%, Westside has grown 27%, and as a result of which they too have upped their target price from 4,800 rupees to from 4,200 rupees to 4,870 with a buy rating. So valuation's expensive, but if the company continues to grow the way that it is, then brokerages are likely to upgrade their estimates.
You know, I read a report which called it the Desi disruption of fast fashion, right? I mean, there are huge fast fashion giants in this space, whether it's H&M, Zara, and now, of course, you have our very own Zudio coming in and becoming a hot favorite in the Indian market. I mean, speaks a lot about homegrown brands. But thanks a lot for that, Mangalam. Vesuvius is the other stock that we're looking at. Nigel, over to you.
Well, you know, a year or so ago on our show Inside Out, we had presented this company. At that point in time, the stock was around 1,700 rupees odd. It already had doubled. But we had highlighted it that it could be a possible steel ancillary because, you know, a lot of what they produce goes to steel companies. And the stock now, this morning, in fact, it hit 5,000 rupees. So in the last 1 year, it's been a big outperformer. Let's run you through the numbers. Well, they grew by close to 24%, which is spectacular. Not just the growth, you know, the EBITDA number growth was even better, coming in at around 78%. And that's why the margins were at around 20.8%. I think the last time we had margins like this was in 2013. And remember, the revenues have scaled up considerably. So the net profit as well looks very good. How do they manage this? Well, their product mix has changed. They're going to more towards the value add side. So that's point number one. They're focused on the cost side as well. And just, you know, a month or so ago, the parent went ahead and increased the investment in India from around 500 crores, which they'd earmarked. They're saying now they'll spend around 1,000 crores odd. If you say, what are the valuations? Well, they did an EPS of close to 34 rupees odd in the first quarter because they follow calendar year. So extrapolating that, it was trading at around 32 times. Now with the move that we're seeing today, it's closer to around 40 times odd. But a rank outperformer, the stock up 10% on the back of those spectacular numbers.
All right. Amazing sort of run Vesuvius has had over the last 1.5 odd years or so. Nigel, thanks very much for that. We'll take a break. We are back with Aseem Zru, Managing Director and CEO at SBFC Finance. We'll talk about the large block trade which happened earlier today. And of course, they reported their fourth quarter earnings earlier as well. Stay with us.
Co-powered by
Aseem Dhruv of SBFC Finance is now joining us. SBFC saw that big block trade earlier this morning. They also reported numbers for the fourth quarter and for the full year early on, and numbers are actually pretty strong. I mean, 38% growth in assets under management, and they're guiding, I think, for about between 5 and 7% AUM growth on a quarter-on-quarter basis, at least in the medium term. Aseem, good morning. Great to have you with us here. Thank you very much for your time. Prashant this side. Can we just first get that block trade out of the way? Could you give us the exact specifics? I mean, this is the promoter entity which is sold?
So this transaction has just happened. We will be disclosing it to the exchange. We will be allowed to talk about it only after the disclosure happens.
But what is the I mean, just under 6% equity, right? Has changed hands. That's the exchange data.
That's right.
Okay, and you can can you tell us this is because we had reported earlier that the promoter entity is the seller.
Yes, so Upwood, which was owning 5.5%, is fully exited, as was the plan. And now the company from here will be the promoter. That promoter will be Claremont, which owns 54%, and the rest is now widely held.
Okay. Any further plans at all for stock to come to the market from any of the entities, in your knowledge?
No. It's done. This was what was at the start of the issue itself. We had explained that this is what would happen. That has happened, and now from here on, it's business as usual.
Okay. Aseem, hi, good morning. So since it's business as usual, let's talk about that, right? Business momentum has been pretty strong. Your disbursement growth has been about 15.5%. Is that something that can continue, and what's the outlook for FY25?
So we are coming off from a Goldilocks scenario in financial services last year, where we had a buffet of all good factors playing out. So you had very strong growth. You had extremely comfortable NPA levels, and you had margins holding intact. Going into the next year, considering the way the banking system is on liquidity, there is going to be a pressure on NIMs that we'll have to handle. Growth, the regulator also has been guiding slowing down of growth to happen in the economy, and it would eventually play out that way. There would be continued pressure on NPAs coming this year, as we would see. However, where we stand as of now, we are confident that we would be able to handle all these three winds that are going to blow against us comfortably.
All right. Hi, good morning, sir, and good to see you in. Nigel on this side. So give us some guidance then. What should the NIMS number we should be working with, and also asset quality, if there could be a bit of a blip, what is the rough number we work with for FY25?
So we have been guiding an 80 to 100 basis points credit cost for SBFC for the near future, and that we are at the lower end of it at 80 basis points right now. There could be a few basis points here or there movement. The exact numbers you can't control, but nothing really material. We would hold it around this level. Margins have actually expanded, so we have our spreads have now gone up to 8.31%. And this quarter, our cost of borrowing has come down by 8 basis points. And during the year, the cost of borrowing has gone up by only 35 basis points, which in a year like this, we consider it to be a good achievement. The rating upgrade to AA minus has helped. It just came about at the right time. We think that we should be able to hold this margin. So our jaw is widened. We exited with an ROA of 4.56%. And we exited with an ROE of 11.9% on a fully expanded capital base post our IPO. So we think that we should be able to continue the momentum from here. Our cost came down during the year by 43 basis points. And we think that going forward, another 50 basis point reduction in cost is possible. We are building towards, by exit FY26, towards a 15% ROE model. And we are on track, and a little earlier, a little later, we should get there.
Okay, 15% ROE by FY26.
Yes.
Okay, 2 points. One, you said NIMS, but that was the industry outlook, right? You said you're well placed to handle it. Should be under pressure. I mean, rate cuts are at least not in the view anymore. So I thought it would be the other way. So that is one, if you could answer that. And for you, I think as a percentage of the AUM, gold loans are about 15%, and MSME is pretty much the rest, right? How will this mix change as you go forward?
No, this is unlikely to change. It will remain in the same handle. We think that we should be in the same handle. A percentage here or there can move, but otherwise it will be in the same handle. What we're looking at is that on the interest rate scenario, overall the 10-year US bond is now more than 4.5. And under this situation, with the US consumer inflation also at 2.6, 2.7, it doesn't look like there is going to be a rate cut happening anywhere there in a hurry. And it doesn't look like in India, we also have to defend the dollar rupee. So it doesn't look like we are going to see a rate cut, hopefully, somewhere towards the end of this financial year at best. But at the moment, we are penciling in a zero rate cut that would happen. What we are looking at is that the repo rate is unlikely to move further from here. But there could be a leakage into our cost of funds from the MCLR, because we borrow on MCLR basis. So what we have been doing as a strategy is that we are reducing our reliance on bank funding. It used to be 57% last year. It is down to it was 70% last year. It's down to 54% now. And we would be borrowing more from the NCD market, borrowing more from DIIs to diversify our borrowings, because we anticipate that cost of funding through banks may continue to get a little more expensive.
Okay, thanks a lot for that. Have a great day. That is the word coming in from SBFC Finance. But let's do one thing. Let's focus on some stocks now. M&M is clearly the top Nifty gainer this morning. If you missed out on the action there, the stock is up 22% in 2024 already and has hit that 52-week high of 21.29 on the 22nd of April. But why is M&M in focus today? It's launched a facelift of one of its popular products, the XUV300, and the facelifted version will now be called XUV3XO. Now, the pricing is what makes this stand out. It's very competitive pricing. It starts at 7 lakhs. It goes all the way to 15 lakhs. It's just an upgraded version of the XUV300 UV. And there you have it. Looks all swanky there. Now, M&M has invested 650 crores into this new product and is looking to strengthen its position in this particular utility vehicle space. The bookings will open from the 15th of May. They'll close on the 26th. And a lot of brokerages believe that this new upgraded version will definitely help M&M strengthen its position in the UV segment. It could also help the company get back its market share which it had lost in the last couple of weeks and months. Remember, there is Thar, there is the Bolero in this space which is doing very well for them. And now this uplifted version is something that could add back to their market share. Nomura says that the XUV 3XO launch has the potential to double sales for the company. M&M is now offering several best-in-class features with this facelift and has the potential to increase sales by 50 to 100%, which is about 6,000 to 8,000 units per month. So that's very interesting there if any of you are interested to go for that product. But my colleague Danish Anand spoke to the Executive Director and CEO Rajesh Jejurikar about the new product launch, the pricing, its variants. Listen into what he had to say.
We've had 3 successful SUV launches over the last 4 years. This has helped us to become the number 1 SUV player in the country by revenue market share and the number 2 by volumes. But there is one part of the SUV segment where we haven't been as successful, and that is really 25% of the SUV market, which is the compact monocoque segment. That is about 600,000 out of the 25 lakh segment of SUVs. In that segment, we are number 5 player. In the next 2 to 3 years, we would want to be number 1 or number 2 in this segment. The 3XO, which we've launched today, is a disruptor designed to take us from 5 to 1 or 2. We've hence tried to excel in every dimension. We've called it 6 pillars, which are the 6 key, the design, the space, the ride, the drive, the safety, and of course all the tech that goes with the product. So there are many segment firsts with this product, and we price them very aggressively to enable us to get growth, grow the category, and also to get market share.
Right. Sir, like you mentioned that this is likely going to be a game changer for you in the C segment of the SUVs. If you talk about the entire pricing range, we've seen that it is very elaborate. It starts from 7.49 lakh rupees and goes up to 13 lakh rupees. So within these segments, which segment do you think is going to cater to the mass market segment in the country?
Yeah, so that's an interesting question, Danish, and that's why we've done this very complex, if we may use that word, varianting, so that we're able to appeal to different segments. The 7.49 lakh variant is really the entry-level MX-1, and that's for first-time buyers of SUVs to really give them a very good product, SUV stands, safety, all of that at a very good price, which is 7.49. We also created a very interesting variant, which is the gasoline automatic transmission, which we priced at less than 10 lakhs. Now, that can be a segment creator because, many people want to buy an automatic transmission in their car, but it's way too expensive. So we've created a very good gasoline automatic transmission at 9.99. At the higher end of the market, we're actually looking at market creation.
Okay, well, that's the new M&M launch. Looking forward to it. Nigel, any thoughts on it?
Pricing is good. Huh?
Yeah, it's very
pricing
good.
is very attractive, and when Mr. Mahindra tweeted about it yesterday as well, it caught your eye.
Yeah.
So let's see how it goes. But from a pure customer perspective, it's
not bad at all.
It's not bad at all.
And globally what's happening is there was this EV wave. Now that's cooled down a little bit. So people globally are now preferring not just IC engines but hybrid also.
Right,
and not so much EVs because of a lot of things, charging infrastructure, costs, etc. So at a time like this, M&M launching this IC engine vehicle is good, and the XUV 300 has done very well in the recent past. So let's see how this one goes.
I'll take some tips from you, Sonia. I'm looking to buy my first EV, so I'll take some tips and some advice from you. But that's the vehicle out there. Looks quite beautiful.
Okay, well, on that note, what also looks quite good is the market, right? So we will bring the curtains down on Bazaar with the note that the Nifty is very strong, almost 100-point gain. The sensex is up about 300 points, so don't go anywhere. When we come back, Chartbusters will take all the action ahead.
Co-powered by